Hey everybody, Jerry here. I'm going to show you how I backtest and traded FOMC, but I want to show you guys more importantly how FOMC will give these big volatile candles up, down. The market reacts, it does all this stuff, but how it still respects key levels and how you can capture some moves and make a lot of money on this. But the backtesting is the key, in my opinion, to how you make thousands and thousands of dollars with FOMC because these candles are wild. We're trading options. They're going to move. There's implied volatility. There's all this stuff happening. So this is a really, really very, very awesome structure in a FOMC that just happened this past Wednesday on June 17th. So I am going to break down all of my key levels and how everything is set. So this will be a video. I'll try to keep it as short as possible. It'll probably be about 7 to 10 minutes long, something like that. So if you like the way this sounds, subscribe to the video, please. The channel helps me get some traction on it. And also, if you are interested in learning how I trade, there is a link below that you can click on it and join the program where thousands and thousands of people trade live with us every day, 9 sessions a week. So we trade Monday through Friday from 10 to 11 and then Monday through Thursday from 2 to 3. So if that all sounds good to you guys, check this out. I'm going to break down this. I have all of my levels set from the Tuesday session, which is the aftermarket high, the aftermarket low, which is the Asian market. And then I have the pre-market high and the pre-market low, which is the London market. Previous day high touches, previous day low touches, and the previous day low wick. And then the previous day open and close, which just gives me a bias on what the market did the day before. I do also have in blue lines here marked all of my all-time highs of when SPY was setting all-time highs in real time on the days that I was trading. So, and anyways, let's get to it. So FOMC dropped at 2 o'clock. And you can see how the market was a little choppy throughout the morning session. Here, it comes down, it takes down the previous day low wick, it distributes down and then goes right back up. Never takes out the pre-market high. However, it did take out this little swing point. This could have been a decent entry here, and then it stopped you out. Personally, this would have been the better entry in my mind. This one here, it takes out this swing point. It literally crushes this lower level with distribution room up, and then it comes in and it rejects to aftermarket high. So depending on how you manage this trade and what the contracts were doing, you could have made some money there. But on to the important meats and potatoes of this video, which is why you guys are here. Let's talk about FOMC, which is the rates cuts and the decisions of how that all made. Now, this was his first time after Jerome Powell has been replaced by Kevin Walsh. So he had some different things to say, which is completely fine. We expected a lot of new things to happen. So aftermarket low, aftermarket high, your previous day lows. We have this nice little push up here. It's really rejecting this lower level in this region. And I don't have my support and resistance on anything, but I'm going to put that where I had it at. So we take this support level that I had there, and then I had my underlying support down in this region here at the bottom of this wick. Grabs this wick and it grabs this one. And one could say underlying could be higher here. So for me, underlying is a region team. It is a 100% a region. It is not specific like support needs to be or resistance need to be. Those are more specific. Underlying and overarching levels are areas of draw where you expect it to come to or anticipate it to come to. So, and those gaps can be quite large. So if you look at it starting at this region here, it would start at 748.73 and comes down to as low as 747.84. So that's well over 50 cents of area for it to move into. And with options, 50 cents is going to be a lot of money the way those contracts can move, and you can scalp some out for yourself. So if you're looking here, I have the 2-minute on my right and I have the 5-minute on my left. So we get this big push down here, big candle. Candle opens up on FOMC at 750.83 and it comes down to 745.15. It's a $5 candle. That's a lot of massive movement. It breaks support. It breaks underlying support. It's exposing to a big retracement. No questions about it, right? So I took an entry here, very small sizing with a very large stop loss back up into here. And when I mean a very large stop loss, I was using 25-ish% and I was sizing at about 2.5 to 3% of my account. So that way, if I get stopped out, it would be very similar to if I was getting stopped out with a 10% of my account with like a 12 to 15% stop. So I'm always trying to keep my risk management parameters in check to where I don't lose large portions of my account with a trade, right? So I took this here, I got filled, I got half off of my trade, I took another quarter down in here, and I was never able to capture those runners and get out of that trade. I got stopped at break even at Whipsawed Army. Then it comes in and it settles, And at this point, I'm now moving levels around. So this is how I would back test it and trade it. So now we see it comes down, it distributes nicely. This is a really good move, right? It comes from 745.13 all the way down to 743.45. So from 45 down here to 2 points, that could be a full trade if you manage those trailers correctly and you're quick enough to do that with your execution. So now let's reestablish some levels here as this is playing out. We have this, and I never got into calls here. So let's put overarching, and now we'll turn in these old levels of support that we were using into resistance because we need to anticipate reactions there. And then resistance could be moved into this region here when you're back testing. So you get your flush down, you get this. This is now undecided. You are in clearly bearish territory, team. So trading against the trend can be very challenging, but reversals can make you a lot of money. You get the bottom of those. So I had now moved up with real-time price action support to this level here. I was not looking at puts yet. I had this level here, and I was using my underline down here. I did not take calls. I did not take puts. Back testing and watching this in real time, these things were really moving fast. Then it looked like it was going to come and set us up for calls, this long tail up here. And then within the last minute or so, this got really weak, really weak, really weak. And I took this trade here. I had my level marked. It closes. I actually had it a little bit lower here. It literally closes right at that. And I was using these levels here with these bodies in this section. So now this closes really firm and heavy. It instantly goes green. It never even gives me a chance to go risk-free. I had a really wide stop. I was sized very small in my account, just to be very clear. And I got stopped out on that trade. I lost some money. So at this point in the session, I'm a little bit neutral. I had a good trade here, and I had a red trade here. However, I was sizing down even off that green trade to protect it. Then this trade here sets up resistance. I take this candle here, bam, 1435. I get my firm close above it, confirming my levels. I was very concerned with the bottom of this range here. However, we had plenty of draw, 748.02 to 748.72. That's over 30 cents. Candles and contracts are moving quickly. I was able to execute, and I was very, very very, very cautious on execution, and I got out most of my positions here. I had some loose trailers trying to protect this region here. I got up here. I was able to slide it up a little bit more. I got a full trade on this one, and it was really, really nice and green. Then aftermarket low in those old levels, resistance turns back into support, moving all these levels around. And I'm just going to get those out of the way and show you the support levels that I all came back into play. I was now using this lower level here where this candle had came down, closed, and rejected. 1, 2, 3 touches here, comes through there. It closes here above it, stayed out, got this one. I rode this all the way back down. My trailers got hit. My stragglers now stayed alive because I was in it way up here. And then I was able to ride this whole momentum chain down, and I was able to capture a lot of money and a lot of movement on this because of my stragglers. And I kept my stragglers in. I ended up getting about 170% profit on those. And it made this whole session very, very worthwhile because of this super aggressive entry up here and then that follow through down. So from a back testing standpoint, now let's talk about that for a moment. I'm showing you how I traded that. And then there's a live video of this, how I traded this in front of several hundred students at the same time. So now let's talk about back testing this. Let's get all of your lines out of the way. We'll get rid of that one. We don't need it. So if you were to now come back and look at these key levels to back test it, you would obviously stay away on the 5-minute candle the way I trade. This candle is a no trade because that is the news happening. Now, once this confirms here, if you had this upper level of support like I did, you would have had a level of resistance probably in this region here or at the top of this swing point, which would be most likely what you would be doing. So now with your swing point up here and your resistance, you would have overarching into this region here at the top. So you have lots of draw up with a firm green candle. However, it never presented itself, which is fine. We don't care about that. What we are looking for is back testing entries that would have worked. So now what we know is this candle closes firm below your key level. Boom, distribution down, right? Half off, 3/4 trade, maybe a full trade, depending on how you manage those trailers. Phenomenal setup. Then real time setup here, you would move support to here. You would now be pulling your resistance level to this, right? This is all developed in real time. This is not an entry. This, for me, it's not. There's no confirmation that this is going to go back up. There's no old levels to play with, right? So now with real-time price action, you could have moved support to here. This could have been a good entry the way we trade, right? You would have got this, you would have got half off of your trade. This would have stopped you out after you're half off and break even, but this definitely came up, would not have stopped you out. You'd have got some nice movement here for a good full trade or a good half trade. After this candle develops, you could have left it there. You could have brought this down. This candle here, in my opinion, is a phenomenal entry. This is A plus all day long with this this big tail to the top. This lots of selling pressure. It fakes you out. It stops you out. You can't be right every time. It's not possible. Don't try to be. Just need to be right more than you're wrong, guys. Now, this setup here, there's your calls. It closes firm, and above it, you get your big candle full trade. Now, all of these levels are really going to get readjusted, right? This is all happening quick, and this is all happening in real time. You are now moving support back up into this zone. It misses it. It confirms it. It's showing that old support is now still support, guys, right? Now, what you're going to do is you're going to take this candle here. You're going to go risk-free in this region here. There's no reason to get out of this sooner. It's moving. It never comes up, violates thesis. Real price is saying, stay confident, stay strong. Backtesting is showing you that these levels are holding. That's what we're looking at right now. You're 3/4 off into here. Your trailers are going to get snipped down into this region here, most likely, depending. You're definitely out of trailers on this retracement candle. If you are leaving stragglers behind in like 10 or 12 or 15 contracts or 3% of that trade, let's say you're in it with 100 contracts, you're going to sell 50, you're going to sell 25, you're going to trail 15, and you're going to leave 10 behind. These 10 you're leaving here. You're going to keep protecting this region here where your entry was. There's zero reason to give any money back. So now you were just waiting for the news and the development of price action to finish its distribution. And if it comes back and takes you, you left a little bit of money behind, no big deal. And if it doesn't, you make a lot of money, right? This thing now finishes distributing down. So once it gets into this region here, you would move your break even on your stragglers to protect this region here, not this bottom here. You want to protect here to stay alive in this trade, right? It gets your big distribution down. After this candle happens, that's when these get moved into this. Those were at like $1.60. They're at currently $2.90-ish in this region here. So you're protecting them at like $2.50-ish. Lots of room there. This candle finishes going down. You don't move it yet. You let this candle play out. And then when this one moves down, then you move it into here, from here, and you take it another $40 to $50 per contract because of this price movement is so big. You get this big distribution down. And at this point, it's 330, 345, or 335. I sold in full down in this region here when it started retracing back up, and I collected my money. I made a little over 200% profit on those. And that is how I backtest FOMC. The backtesting of CPI days, of backtesting of PPI days, backtesting of FOMC can be very, very detrimental to how you trade and how you build confidence in the system of any trading system that you have. So if you have a strategy and you have a good hard mindset and you know the strategy works, if you're not profitable, it's a nuance that you're doing. You're probably sized too aggressively on some trades, sizing down, you're just inconsistent overall as a whole. So to combat that, to be very confident in all your trades and to be consistent in all your trades, the easiest thing to do is to journal your trades, collect the data, and backtest all of your trades to see what you could have done better, what you did wrong. And sometimes you can do everything right and the trade goes against you, and that's fine too. You're never going to be right every time, every trade. That's not the idea of this. So sometimes you need a little bit wider stop to protect it. Sometimes you need, you could get away with a smaller stop. So it's all relative to the zone and the system that you're trading in under those current market conditions. So hopefully this helps you guys and brings some value to the way you trade and how I trade FOMC and how I backtest the FOMC days and big news days. So if you like the way this sounds, please, again, like, subscribe to this video. And if you're interested in how I trade and want to learn from me on a day-to-day basis, click the link below and set up a call. Talk to you guys on the next one. Have a great day.